Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Shreve here with a breakdown of the action in today's session this Thursday. Now we've got a couple of tight days for the NASDAQ, Ken. Things are looking pretty good.
Not too bad. Another rough day for small caps. Boy, the Russell 2000 took another drubbing today, but the rest of the market holding in there quite nicely. Today, I want to take a look at the enterprise software group, Monday.com, MNDY. Also, in the airline group, where there's not a whole lot going on right now, except for Ireland-based discount carrier Ryanair, RYAAY. And finally, in the restaurant group, also beaten down and not much leadership, but Chipotle Mexican Grill still acting quite well.
Okay, we'll take a look at those three stocks. But first, let's analyze the major indexes. You're right, Ken. Weakness in small caps today, down 1.5%. But the NASDAQ did manage to go green, up a little less than 0.1%. We now have three tight closes in a row, but not really budging, not wanting to give up ground here. Also, the S&P 500 up 0.1% today, and the Dow down just a little bit, 0.1%. Your thoughts?
Well, it's been a powerful move for the Nasdaq since early November. It's been very stubborn about giving back gains, and even when I'm looking at the daily chart here, I'm seeing some higher volume gains along the way. So I think there's a lot to like about this uptrend that was confirmed. Like I said back in early November, we've been talking about these large cap technology stocks that are holding gains right along with the Nasdaq. We've had very little in the way of higher volume declines, which can often cause problems for an uptrend. But overall, things are looking fine, and holding out hope for a good Santa Claus rally. I think it's begun, and we'll see where it takes us by the end of the year.
Okay. And, it's only been 3 days here, but can the NASDAQ find a home above 14,000 and stay there?
Yeah, I mean, I think I think it could. It wouldn't be surprising. We've been talking about a market that is overbought by many different indicators. So at this point, a pullback wouldn't be surprising. But like we've been talking about, it's just important to watch the nature of the pullback. I mean, if it's happening in light volume and just kind of drifting calmly lower, you much prefer see that than higher volume declines, what we call distribution days. So, yesterday, the Nasdaq gave back some of those gains. Really had the feel of a stalling type session, which we look at as distribution and a negative. But see, volume didn't was lower than the prior session, so it didn't count as stalling. So, overall, very limited distribution in this market, and leading growth stocks. Most are showing strength and support here.
Right. We'll take a look at the S&P 500 now. It too, with a couple of tight closes, hasn't yet gotten above its early September highs, but could be soon if the momentum continues. But like you said, some sort of pause, digestion, rest, something like that. We've had a couple of strong weeks, but momentum definitely has been on our side lately. Let's take a look at the Dow as well here. Maybe a little resistance above 35,000, but overall, it really does just seem like small caps remain the concern. We had resistance at the 200-day line yesterday, and seeing the Russell pulling in more today, Ken.
Yeah, I mean, you had that 5.5% gain on Tuesday for the Russell 2000, and we were like, "Wow, that was a pretty explosive move for the Russell." And then yesterday, it kind of bumped up against its 200-day moving average, and then got turned away, and then more selling in small caps today. So that's that's a yellow flag. But again, when you're just looking at the Nasdaq, the S&P 500, the Dow, there's a lot of good underneath the surface here. We've seen breadth improving, and we've seen more industry groups and sectors participating here. So I think all that bodes pretty well. But if you go back to, just go back to the chart of the S&P 500, and
Sure.
we'll see that the gains have been have been very strong, 6-7% or so since the follow through day on November 2nd, I think it was. The S&P 500 could pull back to the 4,400 level, and the technical picture would still be intact here. It would still be holding above short-term support levels. Now, if we do pull back that far, that probably isn't going to feel real good because that's a few percentage points below where we are now. But the scope of the gains have been so much that a pullback to short-term support levels, could be the pause that refreshes here. It may or may not happen if we continue to trade tightly near highs. That could also pave the way for more strength here.
Great. Okay, next on our list, let's take a look at XLE. What's going on with energy here, Ken? Seeing this coming off today with an outsized decline.
Yeah, really the selling in the oil and gas sector not that long ago, while most of the market was struggling, you had oil and gas stocks outperforming. People thinking, hey, this might be a little pocket of leadership for the market. But I'll tell you, all the selling, and you've seen a lot of higher volume declines in XLE over the past 3 or 4 weeks. This to me is just a demand, probably just a demand issue, with concerns still out there about a slowdown for the economy. At this point, the market is expecting a soft landing. That could play out. But there are concerns that the economy could slow, and I think oil's weakness is probably just in anticipation of weaker demand down the line. We'll have to see. But oil's technically. The oil market looks quite weak here, and we've seen a lot of former leaders in the oil and gas space that have really come in sharply.
They definitely have. Well, one area that's looking interesting still is software and tech more broadly. Here's a look at Monday.com, and the enterprise software industry group now ranked 51 out of the 197 groups that we track. A positive earnings reaction, Ken. I'm going to go to the weekly chart here because we do have a trend line that is getting cleared this week. But should traders look for some sort of pause here before buying, or what are your thoughts on the kind of potential entry this one's presenting?
Yeah, I think that's the challenge right now for people that might have missed out on the rally since that was confirmed November 1st, November 2nd. It's challenging to put money to work, and I would say even right now in a name like Monday.com, kind of feels like you'd be chasing. But you can see the weekly volume this week much higher than what we saw the prior week, and then the volume last week was higher than the prior week. So this to me looks like a stock that's under accumulation. We've been complaining a lot about stocks rising in light volume. It's really difficult to find stocks under accumulation here. So anytime I find a stock with an accumulation distribution rating of A, like Monday.com, it gets my notice. In fact, that's the three things that the stocks that we're looking at all have in common, definitely showing signs of accumulation. So for me, this is on my watch list, and I think it still has the potential to be a leader. The top line growth and the bottom line growth has just been spectacular in recent quarters. And look at the huge increases in fund ownership over the past 3 quarters. I mean, you're talking a lot of funds discovering this company's growth story. So what we have is a stock under accumulation. I would just like to see the base complete here. It could it could break out over its recent high. Like a lot of other stocks, though, this one, after what looks like 3 straight up weeks, could use a little breather, a little time to digest the gains. But good one for the watch list.
Okay, let's get your thoughts on RYAAY in the airline group. It looks like traders are saying yay here for this one, but it's definitely had momentum as of late. And we're also seeing an RS line blue dot that underscores the recent outperformance here as it breaks out this week.
Yeah, you can see the industry group ranking of 166. That's not very good. It's kind of near the bottom of the 197 industry group rankings. And it's not surprising because when you look at names like Delta, American, United, I mean, these stocks have returned to top line growth, but many have corrected so far off their highs. suffering from institutional selling. Yeah, you saw these domestic carriers in rough shape, but Ryanair, it's a discount airline based in Ireland, and just the fundamentals here. When you look at the top line growth, it's been slowing a little bit, but 32% revenue growth in its latest quarter, 51% earnings growth. So there's good fundamentals here, good technicals, but again, a lot of daily charts look like these. This stock has been up, I think, 11 out of 12 sessions. It's in that blue box, which shows that it's technically still in a buy zone here as it breaks out. But I would definitely wait for a little pullback here. It just feels like you'd be chasing it. But again, as you highlighted, another example of a stock under accumulation.
Yes, it is. And last but not least, let's check out CMG. This is Chipotle Mexican Grill, yet another stock with a very strong advance, in part helps by the latest earnings report, but only 2 down days in a row since its quarterly report in late October, Ken. And it's now trying to get to its new highs for the year and to clear those July highs.
Yeah, I think similar to Ryanair in the airline group, there's not a ton of leadership in the restaurant group right now, and you can see the group is down around 144, so definitely in the bottom half of our rankings. But Chipotle is one of the shining stars here. They've been raising prices. Really haven't seen much of an impact on traffic. Brian Nickel, CEO here for several years now. Just a great management team, very high return on equity at Chipotle. So again, for a restaurant stock, this is a name to watch. It's a nice base forming here. Again, a lot of up weeks in a row. Maybe it's going to start to drift lower, but I think all three of these stocks should be on the watch list because they're leaders in their respective industry groups, especially Ryanair and Chipotle.
Great. Thank you so much there, Ken. And thanks everyone for tuning in. That is it for today. But we will be back with more tomorrow morning on IEBD Live. And we're going to be joined by hedge fund manager Jim Ropel. So don't miss it. Investors.com/IEBD Live for all the details on that. We will see you there. And we'll also see you right back here tomorrow at the close.